In today's video, we're going to go bottom picking. Bottom picking is a strategy that involves finding stocks that have hit their lowest point, usually a 52-week low, and could likely rebound in the future. This can be a great way to make money in the stock market, but it requires a bit of research and patience. Now, if you already know about bottom picking and you just want to grab my top 10 list, feel free to skip ahead and I'll explore the top 10 dividend stocks that I think are worth bottom picking today. Dividend stocks can be a great way to generate passive income and build long-term wealth, but finding the right ones can be a challenge. Now, before we begin, I wanted to let you know that this video is brought to you by Dividend. Dividend is a stock analysis company that I use to research dividend stocks. Their analysts cover more than 700 income securities every quarter in the Sure Analysis research database to find the dividend stock investment opportunities that are available right now. Now, if you'd like to know more about Dividend, check the link in the description below. So, why is bottom picking stocks important? Well, buying stocks when they're trading at or near their 52-week lows can be a great way to get in at a discounted price, potentially increasing your return on investment in the long run. Of course, it's important to conduct your own research before making any investment decisions. But I find that by focusing on quality dividend stocks, I'll position myself for potential long-term gains, all while minimizing risk. Now, once you've identified some potential stocks, the next step is to do some research. And this means looking at the company's financial statements, reading the news, analyst reports, and of course, watching YouTube channels like mine. Now, you might want to make sure that the company also has a strong outlook for the future. Like, does the company have durable competitive advantages? Do they have a history of making profits? And perhaps most importantly, how long have they increased their dividend? After you've done your research, it's time to make a move. When looking to buy a dividend stock at or near its 52-week lows, it's important to be patient and not rush into a purchase. You can start by buying a small portion and wait for the stock to make a move. If the stock continues to rise or starts to decline, you can then decide if you want to add to your position and reduce your cost base, or ride the wave on the way up. As I said before, bottom picking is a long-term strategy that requires patience and a lot of discipline. It's important to have a well-diversified portfolio and not put all your eggs in one basket because, as we've seen in the past year, the stock market is volatile and it's an unpredictable place. So it's important to have a plan and stick to it. So without further ado, let's dive in to the top 10 dividend stocks worth bottom picking today. Johnson & Johnson is a multinational corporation that specializes in health-related products and services. It's one of the world's most valuable corporations with more than 140,000 employees and operations in 60 countries. Johnson & Johnson's operations are segmented into three groups. Consumer health provides products based on science and approved by medical experts to improve personal health. MedTech, that section offers innovative technology that aims to create a future with smarter, less intrusive, and more personalized healthcare solutions. And third, pharmaceutical products. These are distributed through Janssen Pharmaceutical Companies, which envisions a future where disease prevention, early detection, treatment, and cure will change thanks to its cutting-edge biologics and medical components. Johnson & Johnson recently hit its 52-week low of $150.71. Its RSI flashes oversold and has been showing signs of bullish divergence based on its price and RSI. After hitting its 52-week low, Johnson & Johnson bounced a bit but is still in bearish territory. You might want to wait for signs of establishing the low as the bottom before stepping in to minimize the risk. That said, dividend growth investors will appreciate Johnson & Johnson's rare 2.97% dividend yield. This is a company that's known for consistently paying and increasing their dividends for over 50 years, making it an attractive long-term investment option. Overall, Johnson & Johnson, I think, is a solid company with a strong history of dividend payments and growth potential. It's definitely worth considering for investors who are looking for a reliable dividend stock to add to their portfolio. Next up, we have Cisco Corporation. This is a leading company in the sale, marketing, and distribution of food products to restaurants, healthcare and educational facilities, and lodging establishments. Cisco's U.S. broadline operations offer an extensive range of food products, including seafood, custom-cut meat, produce, specialty Italian stuff like specialty imports, and a wide selection of non-food products. The company is committed to providing the highest quality of products to its clients. Cisco operates in various countries, including Canada, Bahamas, Mexico, Costa Rica, and Panama, offering a complete range of food products and various non-food products. The company is dedicated to meeting the needs of its international clients by providing tailored solutions that fit their specific needs. So they give a product that their customers want. Cisco's Sigma segment provides customized distribution operations in the United States, serving quick-service chain restaurant customer locations. The company's distribution network is designed to help its clients achieve their goals and meet the demands of their customers. Although Cisco Corporation is a leading food distributor, it's been in a bearish trajectory since last March, and could potentially retest its 52-week low of $70.61. But their dividend today is currently 2.61%, which is not bad, and the RSI has been hovering in bearish territory since December. As an investor, it's important to wait for a clearer sense of recovery before investing in the company. Next up, we have Steppen Company, a specialty chemical manufacturing company based in the States. Founded in 1932 by Alfred Steppen Jr., Steppen Company is a leading manufacturer of surfactants and polyester polyols. With over 2,200 employees globally and 20 manufacturing facilities in 11 countries, the company operates 3 business units: surfactants, polymer, and specialty products. Now, let's talk about why Steppen Company might be a potential bottom pick. Since early February, the stock has been on a continuous downtrend and could retest its 52-week low of $91.64. Its RSI is currently in the oversold territory, indicated that we may be due for a bounce. However, investors should always err on the side of caution before adding stocks to their portfolio, as it poses a higher risk due to the stock's potentially continuing downward. That said, the stock currently has a dividend yield of 1.54%. Next up, we have Abbott Laboratories. Now, this is a diversified healthcare company operating in more than 160 countries. The company provides various products and services to the healthcare industry, including pharmaceuticals, medical devices, and of course nutrition products. The company was founded way back in 1888, and Abbott today has a long-term vision and diversified business model with several businesses that should continue to grow over time. With more than 115,000 employees, Abbott also has a significant global reach. By the way, I wanted to give a big shout out to barchart.com for letting me use their charts in this video. I went ahead and I left a link in the description below that'll get you a free account. Although Abbott Laboratories has a diversified business model, a decent 2.08% dividend, and a long-term vision, its stock price has been in a bearish trend and is currently headed towards its 52-week low at 93.25. The relative strength index is starting to show signs of divergence, indicating a potential reversal in the stock price. Still, investors might want to wait for additional confirmation signals before considering a bottom-picking investment strategy on this stock. Next up, we have Nordson Corporation. This is a company that develops and produces systems and products for dispensing, applying, and regulating biomaterials, coatings, polymers, sealants, adhesives, and other fluids all over the world. Nordson also produces tools for inspecting and testing electronic parts and technology-based systems. Nordson was founded way back in 1935 and is currently headquartered in Westlake, Ohio. The company has over 7,000 employees worldwide and operates in two sectors: industrial precision solutions and advanced technology solutions. The Industrial Precision Solutions segment offers automated adhesive dispensing systems for the packaged goods sector, applications for converting paper or paperboard, as well as the assembly of plastic, metal, and wooden products. Also, it creates and markets components and systems for the thermoplastic melt stream. Advanced Technology Solutions segment provides bond testing and mechanized optical, acoustic, and X-ray systems to inspect and analyze semiconductors and printed circuit boards. Now, you might be wondering why Nordson is considered a bottom pick today. Well, like many others on the list, its RSI is currently in oversold territory. So investors should wait for signs like volume accumulation, divergence, and so on to provide a clearer signal when it might be time to buy in. That said, while you're waiting, Nordson stock is currently paying a 1.27% dividend yield. Next up, we have Middlesex Water Company. This is a company I haven't covered yet on the channel, but they're a water utility, primarily managing wastewater and regulated water in New Jersey and Delaware. The company is divided into two segments, regulated and non-regulated. The regulated segment collects, treats, and distributes water to clients in certain regions of New Jersey, Delaware, and Pennsylvania who use it for fire protection, business use, and residential use. The non-regulated segment largely provides contract services for the upkeep and operation of municipal and private water and wastewater facilities. Middlesex Water also has several subsidiaries, including Tidewater Utilities, Shore Water Company, and White Marsh Environmental Solutions. Middlesex Water recently hit a 52-week low of $72.64, but since then, astute investors have scooped up some of the shares and the prices bounced back around $76. This might be a sign of a short-term bottom, and investors should keep an eye on how prices behave in the future. In the meantime, Middlesex Water investors will be interested to know that in October of 22, they raised their dividend for a 50th year in a row, making them a newly minted dividend king. And if you buy the stock today, you'll collect a 1.64% dividend yield. Next up, we have General Dynamics Corporation. This is a global aerospace and defense company based in Reston, Virginia. They were founded in 1899, and today the company has over 100,000 employees worldwide. The company operates in more than 45 countries, and they're divided into 4 business segments. The aerospace segment, which manufactures premium business aircraft and is an industry leader in repair, maintenance, and overhaul services for aircraft. The Marine Systems segment is the leading manufacturer in the U.S. Navy's surface combatants and auxiliary ships construction and design. Additionally, it's the top developer of nuclear-powered submarines. The combat systems segment is the top producer of various types of combat vehicles and weapons, divided into 3 business units: European land systems, and ordnance and tactical systems. Lastly, the technology segment offers a broad range of services, IT solutions, technologies, and numerous products to federal, civilian, military, and intelligence customers. Currently, General Dynamics prices are in a strong bearish trend, but it's now moving up from its 52-week low of $207.47. The RSI is also oversold, but that could change. Not only that, the dividend yield is a healthy 2.42%. Next up, we have Gorman Rupp Company. This is a firm that designs, produces, and sells pump systems for various applications. The company has a presence in roughly 130 countries across the globe and offers a wide range of pump models in different sizes and capacities. It's also a company I've never covered before, but I will be on this channel, and I'll tell you why in a bit. The Gorman Rupp Company pump types include self-priming centrifugal, standard centrifugal, magnetic drive centrifugal, axial and mixed flow, vertical turbine line shaft, submersible, high pressure booster, rotary gear, rotary vane, diaphragm, bellows, and oscillating. Now, let's first discuss why this is a bottom pick. First, like Middlesex Water Company, they've recently increased their dividend for the 50th consecutive year, making them a newly minted dividend king. By the way, check this video up here for a list of my favorite dividend kings. The Gorman Rupp Company's 52-week low was $22.67, and today the shares are trading about 10% higher, and potentially they have a long way to go. I mean, if you look at their 52-week high, it was $37.36, about 55% higher than it is today. Next up, we have Archer Daniels Midland Company. This is a global food processing and commodities trading organization that was founded back in 1902. The company's current name came about after it bought the Midland Linseed Products Company and is currently headquartered in Chicago, Illinois. Archer Daniels has an impressive global presence with 62 innovation centers, 182 processing plants, and 520 procurement centers across 6 continents. The company has about 42,000 active employees and is divided into 3 business segments: Ag Services and Oilseeds, Carbohydrate Solutions, and Nutrition. It also has 2 minor segments: Agricultural Services and ADM Investor Services Incorporated. ADM's prices have been in a continued slump recently, and its RSI number is hovering in the bearish territory, near the 30 mark. This is potentially a sign of a weakness in the trend. Its stock currently trades above its 52-week low at $70.72, which can give investors a chance to pick up this stock at a bargain. If you're an investor looking to add ADM to your portfolio, now might be the right time to take a position. And last on the list of bottom-picking dividend stocks today, we have Federal Realty Investment Trust. This is a REIT that's been around since 1962, making it one of the oldest REITs in the United States. Today, it's headquartered in Rockville, Maryland, and FRT provides leasable properties in various states across the United States, including Arizona, California, Connecticut, and of course, Illinois. The company offers 3 properties: office spaces, residential spaces, and specialty leasing spaces. Recently, Federal Realty Investment Trust hit its 52-week low of $86.43, and its RSI is already reading oversold, which can indicate a weakness. Investors interested in adding FRT to their portfolio should probably wait for signs of divergence and additional buying signals based on how fast prices have fallen to minimize potential risk of buying early. So there we have it. Bottom-feeding dividend stocks can be an attractive option for investors looking for higher than average dividend yields, dividend growth potential, as well as the potential for capital appreciation. The stocks on this list are companies that have seen their stock prices decline, resulting in an increase in their dividend yield. While investing in stocks that have hit their 52-week lows can be a potentially lucrative strategy, it's important to determine the potential risks and rewards. Look at the company's financials. Look at their dividend payment history and overall market trends before investing. Investors must also be aware that high dividend yields may come at a cost of lower dividend growth or even a potential dividend cut. And that's why I like quality companies like those that are on the Dividend Kings and Aristocrats lists, because these are companies that have increased their dividends for 50 years or 25 years in a row. So, do you own any of the companies on this list? Let me know if you do and why or why not. In the meantime, thank you so much for watching, and I will see you in my next video. Bye.